starting in 3, 2, 1. Hey guys, welcome to the channel. I will be Saint from Saint X here. So this series, I would like to touch. I would like to, touch on the, what will I call it now? The beginner's guide to technical analysis. So obviously, technical analysis is the process of analyzing, of course, is the process of analyzing or going through your charts and determining the best entries, take profits, stop losses, and things of that nature. Basically, it is the ability to trade well, or the ability to trade and make a profit. So that's if your technical analysis is good. To start with, I'll personally, I would have preferred to start with candlesticks and some terminologies, but if you guys want me to do that, I felt it wasn't necessary. So if you guys want me to do that, you let me know in the comments, and by your likes, by your comments and likes, and I will know that you all are interested. So I will do that. For now, I would like us to delve into a topic I'd like to call key levels. Now, most traders do most will I call them idolos now, or most mentors. I've been through some, and I realized that they don't actually take you down to the nitty gritty of it. They don't actually teach you the very basic essentials that I believe actually gives you an edge. Yeah, it's nice to know your supply, demand, liquidity, and all those complicated things, but it's the simple things actually that actually give you the most powerful or the best results in my case. So with that, let's dive in. Yeah. So what are key levels? First of all, key levels. What are key levels? Key levels are simply areas where price reacts or pivots. Those are key levels. Those are key levels. Key levels are areas where price reacts or pivots. Now, it would be very much more suggestible and probably a lot better for you if you can have a note to jot down most of these things, because I'm going to really get into it here. So there are two types of key levels, or key levels consist of two things: support key levels consist of support and resistance. Support and resistance. Sorry, I'm not using my I'm not using my main trading view account, so just forgive me. Whatever pop-ups pop up. So first of all, what is a support? It can be defined as like a floor. I know you see the chart here, and I'm just writing over here. There's a reason. I will get into it. I will get into it. Let's talk for a bit, then we'll enter our charts. So support, in a way, is like a floor consisting of buyers. These buyers push the price up, or they stop the market from falling down. You can easily see an example here. as the price comes down it stops. So this is our floor of buyers, and look at them over here. They stepped in, they took the price up, did it here again, did it here again, and so on and so forth. So that's support. Resistance, on the other hand, is quite the opposite, acting more or less like a ceiling. If you look here, you see price try to go up, it hits the ceiling and came down. So that is our support and resistance. Now there's actually one more type of key level, or it is a key level that consists of the two types of key level, and we call that flip zone. So flip zone are areas where support turns to resistance or resistance turns to support. That's STR or RCS for short. Support turns resistance or resistance turns support. You can see that you can see an example of that somewhere around just give me a second, around here. Look here, you see that there's resistance around here, and then all of a sudden it broke through, bounced on it, and continued moving. You can see it from this simple move. Resistance, broke out, pulled back in, completed its flip over here, and the rest was history. Now so once again, flip zones are areas where price breaks the support or the resistance, comes back to it, retests it, and then continue moving in the intended direction. So with this now, I believe another thing we would like to know is how we identify them. So before we move into that, let me give you examples of supports, resistance, and key levels in general. We come back now to our chart over here. What asks where do we find our support and how we will draw it? Well, we identify these key levels by using horizontal line, as I've selected here. You see it's horizontal line. So this horizontal line now, I will come in. I typically like to start from my higher time frame. On my higher time frame, for me, I use the 4-hour, because I'm not an intraday trader. I swing mostly, but so let me just say I'm a swing trader. So I use my 4-hour, and I'm going to look at. Most people just use support and resistance just like that. They look for multiple touches, like an area like here. You can see price touched 1, 2, 3 times and still move. So you can really say that, yeah, this is a very strong support over here. And if you look close here again, you can see so much consolidation, and yet price still moved up. It's red now, but it moved up. So this you can also say that around here price found support, around here price found support, so on and so forth. But I do not typically use ordinary support or ordinary resistance when I'm looking at my key levels. I typically use only flip zones. So I'm going to show you an example of just support, an example of just resistance, and then an example of the flip zone. So here again, sorry for all these pop-ups, I'm not using my main account. Here we have support. Up here we have resistance. And if you look closely at that place where I described to you before, you can see our flip zone. Now, if you look at this chart, what is the difference between these three? As specified here, support. So as we can see, support is why I say this is just simply support. I'm not going to go too far back just for the sake of example. We're just going to start from here. You can see that price did not try, there's no price under this, so price came down from here and immediately pivoted or turned back. So we say this is our floor of buyers or our support. When it got up here, it hit our ceiling of sellers, our resistance, and came back down here. Now, in the middle right here, you can actually see that price did something like this. I know I'm skipping a lot of the substructures, but that's not what we are really focusing on right now. So what price did right here is flip. What did it flip? It hit resistance, obviously multiple times, but it hit that resistance. It came down, letting us know that yes, this is really a ceiling of sellers, and broke past all of those sellers, meaning that the buyers here, the support that it got from here, or the amount of buyers that were here, were too much, and they overwhelmed the sellers up here and broke through. Typically, why flip zones are really good is they they just instantly tell you that yeah, this is the direction that price wants to go. So they call it, you can call it a break of structure, a break and retest, or anything you want to call it, but it is simply a flip. Price hit resistance, came down, broke the resistance, and used that same area where it was formerly resistance as support. So resistance turned support, or RTS. That's over here. With those examples now shown, let's take a step back once again and come to our support and resistance. Supports are those areas, like I said before, where buyers step in and strongly stop them. They step in strongly enough to stop the market from falling any further. And on the chart, you can actually see it. Price would have gone a lot further than this if not for the support that it got here, and price would have gone higher if not for the resistance it met here. Once price yeah, so going back, like I said, we we identify it by marking out all those. So now I've been able to kind of specify for you which of these are resistance, which of these are support, and where's the flip zone. So how am I going to use, or when I want to mark it, how would I do it? So in my 4 hour right now, I take my horizontal line and I'm looking for another point where price kind of flipped. So I'm looking at multiple touches, obviously, but in different directions. I'm saying 1, 2, 3, 4, 5, 6, 7, 8 reasons why this area is a good place to place my key level. Next, I'm looking for another good strong pivot area. I'm seeing 1, let's start from here, 1, 2, 3, 4, 5, 6, 7, 8, and 9. So I know that around here too, I can confidently put another key level. I don't need too many key levels so my chart isn't all jumbled up, or I'm going to add one more because I'm seeing a major, see, bam, there was a lot of support here. If not, price would have just continued coming down. So I'm going to put now. You will say, oh, but there's no much here. There's actually a flip here. If you look properly, it's happened like this. Hit resistance, came down here, passed it, came to flip over here before moving. So you can actually see the flip zone right here. So now that I've confirmed that that's actually a flip zone, if I go back further enough, I can probably still see that yes, 2, 1, 2, 3, 4, 5, 6. 6 reactions is good enough. If I go further back, I'll probably still see more, but I'm okay with this. So now that I have all of the most, or what I feel are the most important ones, I can have maybe just one extra to mark out this area here, and then I'm done. That's 1, 2, 3, 4, 5, 6, 7 lines. Most of these lines will not be necessary because, like for example this one, because I know that if it comes back here, it's likely to just keep selling, so I'm going to not really bother about this one. But here, which is where price currently is, our flip zone, if you look, this is a mini key level, which I usually call my liquidity. See, it swept it and then entered into this demand, or this week over here. This week I use it as my demand zone, and it's going up. But I'm not here to talk about demand and supply, so let's keep it on point, on topic. Well, I'm not going to go much further than this, so let's talk about some common mistakes that people do make when trying to put this. Now, the too many lines, I spoke about that already. Too many lines. If you look at my chart right now, it's still neat. If I go to my 1 hour time frame, it's still going to look nice. It's not going to look jumbled up or messy, which you should never have your chart looking messy. You see, this is neat, very neat. So if I wanted to add like my trend line now, I just take my trend line and I'm here. Bam. Chart still neat, everything understandable. So but we're not, again, trend line will be our next topic, so stay tuned. And if you enjoyed the class, if maybe I'm not I skipped 1 or 2 things or something you don't understand, do let me know in the comments. But going back to how to apply this key levels, once you've put it on your higher time frame like this, it's good you can go to your lower time frame, maybe like the 1 hour. Don't go lower than the 1 hour for key levels, because you're looking for those high probability areas. High probability areas usually do exist mainly in your higher time frames. So you look for where price has reversed and touched multiple times in the past. You draw your horizontal line, and then you drop down to your lower time frame if you want to use this for your entry. I will not really be focusing on entry of any kind using during the course of these tutorials, but at the end of it all, I will do a video putting everything together. That's my own thought process when I'm trying to trade, how I'm actually utilizing all of these things I'm talking about. So I will do that at the end of the tutorials. I'll be the very last video. So do be sure to stay tuned. Let me know what you think of the classes. Share it to someone you feel is in need. Watch it as many times as you need to. Now let's talk about some common mistakes that people make in using these key levels. First of all, like I said, too many lines. You shouldn't really have too many lines. Just focus on the most recent and the most obvious. See, when I started, I didn't go too far back I don't need all of this. So I didn't go too far back trying to look at all of this, because yes, all of this was actually vital to me during the course of this move from here to here. It was this, the key levels here will be vital, but we are no longer looking to here. We are in this range now. So the what will be important to me is no longer from there, but inside this range here, key levels in this range. And as you can see, I've made sure that I'm lining up perfectly. Now it is left for other confluences, as your real strategy will now be based on what you can see utilizing this zone. So make sure your lines aren't too many so you don't get confused. Don't ever force a level, like someone now just carry or the horizontal line and just go and, let me see, random place, I'm just gonna put it here. Yeah, but nothing really happened there. Nothing really happened there to me. You can say, okay, flipped. Did they even flip it? Resistance, yeah, okay, flipped it here, but when you look at the back, you can see that no, these are the main ones, one up here and one down here. So I don't need this, it's unnecessary. I'm just going to look at what is recent, that this is recent. 1, 2, 3, 4, 5, 6. And if you see, they're all flip zones. See it here, flipped here, this one came, flipped here, this one came, flipped here, this flipped here, and this is just support, and that's our resistance. So then also don't expect that I'm using lines, but I'm using lines, but I keep saying zones because these are actually zones and not lines. Lines are just one particular price, but a key level is like, okay, we can say from between $110,000 to $109,000 is a zone, and Bitcoin entered into that key level or key zone and moved from there. So don't ever expect that it's just a single particular line. It's not a single particular line. You understand? So they can, and then you use it in combinations. Don't ever use this as a standalone. Use it in combination with an actual strategy or other confluences before you enter. Okay, before I go, let's try and summarize it up. Key levels are areas where price reacts or pivots, consist of support and resistance, and support is our floor, where price finds support or price goes up, and resistance is our ceiling, where price comes down. Then flip zones are areas where support turns to resistance and resistance turns to support. So after a breakout, well, you go ahead now, enter your charts, go through these steps. If you were jotting down, I know we said a lot today, but if you were jotting down, I'm sure you understand it. So go through your steps, do everything, and keep practicing. Just as many times as you can, open different charts, go do the work. You need to keep practicing. You only get better with practice. You won't get it once. Get better at practice. Well, with that, I do bid you farewell. God bless you. Have a nice day. Please like, share, subscribe. It will really, really help me out. This is basically a new channel. We're just starting out, so we really need the support. Thank you so much.